This is the 2019 company question Lincoln Limited. Uh, for this video we're just going to look at depreciation and disposal of a fixed asset where we're not given the percentage depreciation. So what we are told here is that vans are depreciated straight line over 5 years. Full year's depreciation is charged in the year of acquisition, so when we buy a vehicle we charge a full year's depreciation that year, and no depreciation in the year that we get rid of it. Delivery vans have a 5% scrap value of the original cost. We'll get to that in a second. And this is the usual information we're given about something we buy this year, was traded in, and we bought another one, and something happened with our purchases. We're really just kind of looking at this aspect here and finding out how to find the depreciation when we're not given the percentage. So the first thing we'll do is we start off with the disposal. So I'm looking at the disposal during the year van, which it cost 25,000, was traded in. So this is the cost. I'm trying to find out how much it was worth. Compare that to how much I received for it, because it was traded in for 14,000. See whether I made a profit or loss. So cost is 25,000. I can put that straight in. And depreciation, I don't know how much it was. I don't know, is it 10%, 15%, 20%? I'm not told. What I am told is there's 5% scrap value of the original cost, and I'm also told it's written off over 5 years. So with that information we can actually find out a little bit more about our van. So we don't have a depreciation percent, and what we are told is that there's a scrap value after 5 years, 5% of the original cost. So what can we do? So this scrap value here, 5%, that's how much the van is going to be worth after 5 years. This is what it's worth first day. This is 5 years is the amount of time it'll take to get to 5%. So to get from 25,000 down to 5%, which is a scrap value, it's going to lose 95% of its value. 25,000 multiplied by 95%. This will be the overall depreciation over the 5 years, 23,750. Did we depreciate it for 5 years? Did we have it that long? No. How do I know that? Because we bought it in 2016 and we sold it in 2018. It's 3 years. But no depreciation in the year of disposal. So there'll be no depreciation for 2018. So I'm only going to depreciate it for 2016 and 2017. So what do I do next? I find out how much the depreciation is per year. So per year, 25,000 is the full amount. 23,750 is the full amount we can depreciate it by. Over 5 years, so that's 4,750. That's depreciation per year. I didn't have it for 3 years to depreciate it by. I'm only going to depreciate it for 2016 and 17. We said that. So loan for the 3 years. No depreciation in the year of disposal. So depreciated for 2016 and 17, it gives me 9,500 as my depreciation. So that's the 2 years multiplied by the depreciation per year. So depreciation for 2016 and 17 gives me 9,500. From there I find how much it was worth. The proceeds, compare that, 14,000 it was traded in for versus how much it was worth, and we can find out that we made a loss on our disposal. Made a loss of 1,500. Now, next part's nice and easy. It's the same as what we'd have usually done. Costs. So I'm trying to find out for the balance sheet what my cost figure is. Well, I know the cost of the first was 155,000. I know that I also disposed of a van that's now gone. Take it out of cost, 25,000, that's gone. I also bought a van. I bought a van for 40,000. At the end of that, then I'm left with 170,000. It's my balance sheet cost. So depreciation for the year. So for this one, there's a little bit of work again involved. So basically, first of all, we don't know the percentage amount. We're going to need to find the scrap value again. But what are we finding the scrap value at? How much of our vans are we going to depreciate? Well, the original cost was 155,000. We've done that already in finding out how much the cost was at the end of the year, and that's actually going to be the amount we're going to depreciate it by 2. Why so? Because there's going to be a full year's charge for depreciation in the year of acquisition. This is going to get a full year's depreciation. And the 25,000, which is part of this 155 here, is going to get no depreciation charge because there's no depreciation for the year disposal. So it's the 170,000. It's my vehicles at the end of the year. That's what I'm going to depreciate it by. So once again, that's 100%. If I get 95%, I find out how much it's going to depreciate by over 5 years. And just because we bought them this year doesn't mean that it's going to be looked at any different compared to vehicles that we've owned before. It's going to divide by 5 years evenly. So the 161,500, I'm going to divide that by 5 years. So I divide that by 5 years, gives me 32,300. That's how much this 170,000 is going to depreciate it by each year. So if we bought all the vehicles this year and they were 170,000, they would depreciate by 32,300 each year. Now the depreciation for the balance sheet's nice and easy. I can find out that my depreciation for the first of the first was the cost minus net book value, so that's 35,000 there. I also have depreciation for the year, and I have disposal to get rid of. So depreciation for the year, we see there was 32,300, and the disposal, I've done that above. I have to take that out. That's no longer part of the business. I'm taking out the 9,500, adding in 32,300, and that leaves me with depreciation for the balance sheet of 57,800. The last thing we're going to do then is your general, how do you deal with it when it's included in purchases? Well, my original purchases figure for this question was 1,045,000. I'm told that the vehicle cost 40,000, the new vehicle. I made 14,000 trade in. So obviously I didn't pay the full 40, they gave me 14,000 off it. I paid 26,000. So I'm going to take away 26,000 from the purchases because it was included in purchases. It was treated as a purchase for business expense when it shouldn't have been. So take 26,000 out of that.